Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on precious metals today, gold, silver, and GDX, the miners. And just a quick reminder, focuses on price action. We look at it on multiple time frames, and we add the cycles to get a sense of estimating how long should this rally last. When would we maybe expect some kind of turning point, right? And for this particular video, we're going to be thinking about gold being in a new 8-year cycle, right? We've talked about the idea that we may have an 8-year cycle low in gold. And so if we do have an 8-year cycle low in gold, that would mean that we're now in the advancing phase of a new 8-year cycle. So do we have evidence of that, right? And we'll do that by looking at four things. We'll look at the daily and weekly cycle updates across those three: gold, silver, GDX. We'll look more closely at the monthly charts to get a sense of the 8-year cycle, where that, do we still have evidence that we bottomed? What more evidence do we need? How do things look going into 2023? And then we'll look at the gold to silver ratio and the GDX to GLD ratio. That GDX to GLD ratio will it gives you a sense of, are the miners outperforming the metal itself, which is what we want to see in a bull market. So with that, let's jump into it. So we're going to start with gold as we usually do. We'll look at the daily cycle. So gold is in an interesting spot here, right? Tapped out on day 8. So day 9, 10, 11, 12, 13, 14. So we made a swing low on day 14. And silver has a same structure, very similar structure, but different count. So that's day 14, 15, 16. And so this is a higher low, right? Like, just to be clear, that's a higher low, that's a higher low, and now that's a higher low, right? That's good. And those should be like that, right? And so that's good, right? We need to stay above that. That gives you, that level is 1725.71. We had some kind of spike down to that level, interestingly enough. But you can see we had higher low, higher low, higher low. That's promising. And if we go to the weekly chart, right, again, you have this like really interesting triple bottom pattern. So if you call this your ICL, we just completed week 3, which was pretty bullish. It's setting us up for this is like a false breakdown setup. But you could also say this was the daily weekly cycle, and these are just kind of back tests. It doesn't really matter. The point is, we need to hold this same level at 1725 is a low here on this weekly chart. And so it makes it very clear you got to hold that level. And obviously a false breakdown below that level would work as well. That would be fine. If we look at let's look at silver. Now look at the daily and weekly. So for silver, it's a different count, but again, same idea. So the top was on day 22 in its daily cycle. So that's day 23, 24, 25, 26. So we have a swing low on day 26, which is that would be a really shallow daily cycle decline. It's also possible that this is just a smaller decline, like a half cycle decline low, for instance. So this would be day 27, 28, 29, 30. Or we're in a new cycle, depending on how you want to think about it. But what is the case, regardless of what the count is that this is a new little rally. It's a new rally leg because this is a new swing low, right? And similar to gold, promising, right? It's holding swing low. Now, it could definitely be. This could be a stronger swing low. Because this is a higher high, but not by that much. Or excuse me, this is a higher low, but not by that much, right? So that's not ideal. But you have something to work with. And for silver, that low is $20.59. And if we look at the weekly, this looks pretty bullish. Similar kind of thing. We made a new low, kind of swept out some stops, and now it sets us up to make a high above that high, above last week's high. And last week was week 12, so we're starting week 13. So we are getting later in the weekly cycle, so I don't love that fact, right? And now let's move on to GDX. Look at the daily and weekly. So GDX, let's see. So 10, 11, 12, 13, 14, 15, 16. So GDX made a higher high on Wednesday, it was, the day before Thanksgiving. And then Friday, it just consolidated, right? So Friday was day 17, consolidated inside that range. And so that becomes our kind of level, right? So like that the range from Wednesday, right? Which is a high of 28.78 and a low of $28, right? And I am long here calls 25 the 25 strike calls, playing for a move above 30, and I got in around 28, and my stop, like I got in when we were around $28, and I would be looking to ditch like my stop, like I'd be looking to get out if we fall below this pivot here, right? Which gives you essentially, that's like 26.76, right? Like if we get below this, then we know that that's broken, that this is broken, right? Like, and so like that's a little over $1 for maybe at least maybe $4 or $5 of upside. So easily a 5 to 1. It's a small position size, especially since they are calls, so like inherently a bit more risky than even holding the stock, for instance. But for that reason, it's a small size. And so at day 16, it's not super early in the daily cycle, but it's also not crazy late. And you can see these last two daily cycles, or last three. This one topped out on day 6, the one before on day 12, the one before on day 14. So worst case scenario, we begin a decline and we hold up. Well, that's not the worst case scenario, but you could see a world where we begin a decline and we hold another higher low above this pivot, and that even gives a chance to add. I mean, we'll see. But again, it's small size because the metals really still have to kind of prove themselves, right? And so that's the daily and weekly chart across the three. Now let's kind of think about let's think about what the 8-year cycle might look like, right? Or where what does the evidence look like for that? So if we look at the monthly chart of gold, I drew this like little fake candle here, what the December candle might look like. I mean, at this point, it's probably going to be like we still have a few days left to trade, so it could certainly a lot of directions it could kind of play out, but it's looking something like this, right? And like what we want to see is make a higher high above there, crossing above that 1818 level, which is the high above here, right? And so we are building a little upper wick here, so you can see a world where we open slightly inside, but it would be at the upper end of the range, like maybe something like that, right? And then maybe we can kind of burst through. And again, the idea is that the 8-year cycle low may have been actually, actually, that's a quarterly chart. Pardon me. I'll flip that back to monthly. And so same idea. Monthly has a little wick here, so we're going to open slightly inside, but we're setting ourselves up for another higher high, which is what we want to see. And the presumption is that the low was actually in September, right? Which would make this month 2 of a new 8-year cycle. Again, we still need to see more evidence. We need to see another higher high from this candle. And if we go back to that quarterly candle, what we really need to see is a move above this candle, which was the Q2 candle, right? Which has a high above at 1814.28. And ideally, we need to see a close of a quarterly candle above that level. So that would mean the close in December, the close of the 2022 year, right? And speaking of that, if we do just make this kind of an annual candle, this will and we'll get rid of the drawings. This will kind of give us a sense for the year, right? So or I should say 2023. It's crystal clear right now. 2023 is going to open as an inside candle, right? The range is 2070 at the upside and 1614 at the downside. So we're talking about over a $400 range. That's huge, obviously. I mean, look at this candle. It's like a lot of wick, which means we're going to not have much signal on the weekly, or excuse me, on the yearly chart. And like unless we break down below that low, it'll really be kind of neutral, more or less. And so we're going to have to watch those lower time frames. Again, that quarterly signal, for instance, to see if we're able to make a higher high. So with that, let's jump into the gold to silver chart, because that generally holds some clues. And just as a quick reminder, the rule of thumb is that when silver is outperforming gold, that is bullish. And so that's what we're looking for here. To confirm a bull market. And obviously if we see the reverse, then that tells us, more caution needed, right? So the gold to silver ratio, Let's look at that bad boy on the monthly chart. Let's look at the 12-month chart first, like the annual chart. So you can see we have this big bearish outside candle in 2020, and now we're getting a lot of upper wick. So as I talked about just now, for gold, we're probably going to end up with a 2023 candle that looks something like that. Right now, it could obviously go to the lower end of the range, or it could migrate to the upper end of the range, but this wick creates that scenario. And if we look at the quarterly chart, we have a swing high on the board. That's important to know about. Now, this candle still has a long ways to close, right? We have all of December to trade, but that tells you that if we do close below that, that sets us up for the Q1 2023 candle looking something like this. And I just talked about how the 2023 candle as a whole is going to open as an inside candle. And that's why it's all the more important to understand what the lower time frames within that annual candle are doing. So look at this structure, right? What it might be setting up, right? And this is totally speculative. I'm drawing, a candle to kind of help folks visualize. And this is what you want to be able to do in your mind's eye, right? Like, look at that. Something like that, maybe a little bounce, and then like that. Like, that's what you might see in a prolonged gold bull market, or I should say precious metals bull market, right? Where silver just continues to kind of massively outperform gold for years to come. And if we just let's zoom in a little bit, like what's the weekly look like, right? So if you think about, so the weekly is actually sitting on a swing low right now. That's interesting, right? Like that is a swing low right now. So that is really interesting to know about. And I say that because it's either a swing low that's going to lead to a sustained rally, or because that was also a swing low at one point. That was a swing low at one point. This certainly was a swing low that led to and ratios don't necessarily move in cycles, but like this is rallied for 19 weeks and this is 29. So it's entirely, that's interesting. So it's entirely possible that the gold to silver ratio on a local time frame, let's say medium term, that silver may be setting up to underperform gold, but at the same time, you can see this pronounced downtrend, and so there's no reason to think that we're not going to just continue that downtrend, right? So maybe you do get like a week or two of outperformance to make a lower high, possibly. And we had looked at sort of like the larger cycles. Like if we look at a monthly chart, and you can see we know we have a swing high on the quarterly chart, and that's coming from this monthly swing high here, which happened in September, which, no coincidence, that's our potential bottom for the 8-year cycle. It's all starting to kind of triangulate, right? And if you think about this rally from this swing low, it was 19 months. Notice all the other rallies have been really long. Like that was a 44-month rally. That was a 59-month rally. Now, obviously, they had their swing highs in the process, but they all continued to go on to make higher highs. This was 30 months. This was 64. So it's like one of these is not like the other, which may tell you that this ends up becoming a higher low. So we have to be cautious of that, because technically, as long as we're above like that area, this could technically remain a higher low, and we could see a world where, this thing ends up doing something like that, right? Like that would be frustrating and sort of misleading, for instance. But we would see that as it's starting to make that move, on the lower time frames. Like we just looked at the weekly, like we may have a weekly cycle low, that kind of thing. And if we look at the daily, what is that telling us? Right, so that's a good thing. That's a good way of thinking about it. Whenever you see a low that looks like a weekly cycle low and you're not sure, it's almost certainly a daily cycle low, right? Because if it looks anything like a weekly cycle low, then odds are it's at least a daily cycle low. Maybe it's just not also a weekly cycle low, because that's just an important concept. Any weekly cycle low is also a daily cycle low. Just like a 3-year cycle low is also a weekly cycle low and a daily cycle low. That makes sense, right? If you're going to have a major low on the monthly level, it has to happen on a specific day, and that day is going to be the DCL, right? I hope that makes sense. So we've been rallying for 7 days. So Again, this is where we're kind of like we're going micro, we're looking deeper. We just may have topped out on day 7 of a rally. So this puts us in the bearish camp, right? That like, okay. And that's a helpful concept that like as you zoom in, you sometimes actually get clarity. Even though the higher time frames are more important, you have to remember that the lower time frames trigger the higher time frames. So this kind of gives you an advance warning. So this looks actually a little bit more bearish. And notice this little rally was 1, 2, 3, 4, 5, 6, 7, 8. No coincidence, right? That lasted 8 days, right? So like that might be telling us something that, you know, gold can't really outperform silver for more than like 8 to 10 days. What is this one? 1, 2, 3, 4, 5. Yeah, that's a little bit more than 8. But we clearly started a downtrend since that high right there on the daily, which coincides with the high on the weekly, etc., and the high on that monthly chart where we see we've been making new lows for the last 3 months essentially. So this is going to be an important one to watch that I'll continue to update on this channel, and I'll close out with GLD versus GDX, versus GLD. That's just looking at miners versus gold, and I started keeping track of like cycle counts, and so you can see we had this 10-week rally, and then we had this huge decline. So how long did that end up lasting? So that was 12 weeks actually, and this was 35. So that rallied for 12 weeks, and then the low came on week 35, which means we had a 23-week decline. So a 12-week rally, a 23-week decline. And we've now rallied for 1, 2, 3, 4, 5, 6, 7, 8. Notice that's exactly the same count as the like GDX itself, for instance. I mean, and this is the ratio chart of GDX versus GLD. So that's interesting. That's kind of just telling you that GDX, and that's part of the reason why I'm willing to entertain that more than any other, is that one looks like a more real move, right? That looks pretty. And I will call out that is a bullish outside weekly candle, right? It's because we made a new low below last week's low and then skyrocketed higher, which usually means follow through. So a candle, something like that, maybe go test the 200-week moving average. I would expect that we would, because I think we're going to get into the 30s, at least that's what I'm playing for. So I'll go back to the GDX versus GLD ratio. So that's week, something like a week 8. And if you think about the monthly chart, looking quite bullish, right? Similar to GDX itself. We didn't look at the monthly chart for GDX, but looking quite bullish and about to make, or basically just about to make a quarterly swing low. Now we need to close above that, right? In December, that's a move above 28.37, right? If we closed above 28.37 in December 2022, that would make this a quarterly swing low and would set us up for another quarter of upside, right? At least another quarter of upside. I mean, obviously you're hoping, you would think more, but something like that, right? Now we still have to contend with this big bearish monster that has a high at 41.61. So like that's going to be a lot of resistance, but you play this thing to 33, 35 even, you can see that, right? And that's nice upside on calls for sure. And really even the common stock itself. So that's the kind of lay of the land. GDX to GLD is outperforming. It's about the same cycle count as GDX itself, and that's your quarterly chart. So we actually already have a swing low on the quarterly chart. That's important to know about. And again, technically we have a swing low on the GDX quarterly chart as well. We've got to close above that though, and there's a lot of trading to happen. We have all of December, and we still have to get through some of November, obviously. And you can see just like long term, it's been kind of down only since 2006. Obviously, this isn't the full history of these two instruments because these are just the ETFs. But we've had a massive downtrend and then all of this consolidation. So you imagine all of this consolidation for all of these quarters will eventually explode to the upside at some point. And, is this the start of it? Now, you have to note, we've had these other periods where there were fake outs, right? This was probably the most pronounced. I mean, this looked really clean, right? And then you had this quarter, which was green at one point. So we have to watch. But even if you get something like this, knowing how price action works, understanding those levels on the lower time frames, you can still make a lot of money and get out before you experience this, right? Because there's going to be, like, let's zoom in here, right? Like, there was that swing high, right? Like, that happened on a quarterly chart, like here. like there, right? So like you could have gotten out like below that candle there and kind of avoided all of this. And obviously, again, this is a ratio chart, not absolute, but it's the same principles. So that's we'll leave it at that. That is the precious metals update. These charts, especially including the ratio charts, are suggesting some bullishness, but we're gonna have to obviously watch the price action this week after Thanksgiving, close out November, and coming into December. The big question again is, do we have the 8-year cycle low behind us? So far, we have evidence that suggests that we do, but we need to collect more of it. And unfortunately, we're really gonna need that December candle close, and we'll be watching the intervening price action in the in the meantime. So that's all we have for today. We'll leave it at that. Thank you.